Last week was marked by the publication of US inflation figures for August, which revealed surprising deceleration in the rise of consumer prices comparatively to previous readings. The question now is, how will the Fed react to the flattening of the inflation curve? This is the ActivTrades weekly outlook, where every Monday we analyze the economic calendar and identify key events, focusing on how they may impact the markets. Stay with us over the next few minutes while I look into how the week is likely to unfold. I will cover a range of topics, including the Federal Reserve FOMC meeting, Eurozone PMIs, and the Bank of England's meeting and rate decision. Last week's release of American CPI numbers confirmed that inflation, which to some extent has dominated the narrative in the markets, is starting to flatten out. After the peak reached in June, numbers have been dropping, with year-on-year core prices rising only 4% during the month of August. There is a question everybody is now asking. Will the slowing down of inflation, which appears to some extent to vindicate the argument used by Jerome Powell and other Fed officials that the phenomenon was transitory, will this slowing down prevent the Fed from bringing forward the timing of the tapering? Despite the lower than expected inflation numbers, the US dollar ended up the week with gains, as investors appeared unimpressed, refusing to move before the FOMC meeting on Thursday. This meeting is likely to provide direction for the short and medium terms. Should the Monetary Committee confirm the bringing forward of the timing for the tapering, the dollar would be likely to find more support and could even test fresh yearly highs. On Thursday, we can look forward to the release of the Eurozone's PMI composite, which always provides a good snapshot of the state of the manufacturing and services sectors. Normally, a reading above 50 signals improvement, while any figure below 50 will point at a contraction. This time around, the consensus points at a reading of nearly 60, which, if confirmed, will highlight the positive sentiment currently dominating the Eurozone. Europe's economy is booming, with growth outpacing both China and the US during the second quarter of the year, as investment pours in and unemployment falls. Such scenario would normally support a strengthening of the euro. However, despite the positive outlook, there are still many hurdles to overcome before the continent's economy is fully recovered from the impact of the pandemic. And the ECB has repeatedly said that no tapering or rate rises can be expected in the near term. So, don't expect a positive PMI to trigger a massive euro rally. We'll end our weekly preview by zooming in on Thursday's meeting of the Bank of England's Monetary Policy Committee, which will offer a rate decision and also a monetary policy statement. Inflation fears have been growing in the UK, especially after August's reading, which jumped to 3.2%. Mirroring what happened in the US earlier in the year, concerns over the sudden spike in consumer prices are growing in the UK. However, just like in the US, such fears have been met by declarations from bank officials that insist on considering the rise as nothing more than a transitory problem. The pound closed last week with losses in relation to the US dollar, showing that few in the markets believe the BOE will have its hawkish pivot moment this Thursday. The British economy faces several headwinds at the moment, in the aftermath of the pandemic and also Brexit. So a shift to tighter policies could end up hindering the recovery. There are tough choices ahead for Andrew Bailey and his team, who must decide if the priority will be to stimulate growth or, on the other hand, halting inflation. This is all for today. I will be back next Monday for another weekly preview. In the meantime, please go to ActivTrades.com for more market analysis. Do subscribe to our channel so we can keep you updated with the latest in the markets, and don't forget to click the like button if you enjoyed the video. Thank you very much for watching.